Hi, it's Drake Briggs with Obsidian Wisdom. Welcome to another Retirement Readiness Thursday. But today I have a special treat for you. Today we're actually going to answer a question that I get a lot. I actually had a call this week where someone was like, "Hey, sell everything. Stocks are going crazy. Not comfortable. Check back in next year." Kind of a call. And it was like, "Hey, everything's okay. The market's a little volatile, which just means it goes up and down." And everything's according to schedule, right? Like that's kind of what you do as a financial planner. You're like, hey, look, we have a plan, we're following the plan, everything's okay. But then, so the next day comes and they call back and like, I talked to a friend. When known people say I talked to a friend, you're like, well, all right, what'd the friend say? And the friend was like, hey, they said that I should be buying more because the stock went down. Is that true? And that's what we're going to talk about today, because I'll just share with you what I had shared with them. And I have a couple of examples as well, because the idea is sound, right? The idea is, well, in a lot of different ways, when things go on sale, shouldn't I be happy that they're on sale? And then I'd buy more. Like if I went to my favorite neighborhood in town and the houses were $100,000 less than the price I thought they were, wouldn't I be happy to buy the house? You'd be like, well, yes. But if the stock market was lower than you expected, you'd be like, well, I'm not happy anymore. I don't want to buy anymore. The question becomes, why did it go down? And I'll tell you a short story and then we'll get into the example. And so there was, right when I was teaching high school economics, student was like, hey, there's this stock that I was been watching. And I was like, okay. It was like, yeah. And it's gone down a lot consistently. And I was like, okay. And he's like, so I'm going to buy some more. And I was like, okay, why is that? He's like, because of course it's going to go back up. And I was like, well, why is that? And then he was like, because it was higher before, right? And I was like, well, fun fact, stocks don't always go back up. Like the stock market as a whole does typically go up over time. That's what we've seen historically. But the idea that every company goes up is different, just like every company going down is different. You have to know why something has changed. And so today I'm going to give you three tips that I normally will use to just help people in a very simple way. And I'll share a couple of more that are maybe a little bit more expanded, but I don't want you to feel overwhelmed. But it's just a few questions that you do want to ask, because we do get advice. People give advice all the time. But is that person qualified to give that advice, right? Like, is that person actually going to give me advice that benefits me? Or is it, like, for example, that, oh, this is the next Amazon. Okay, why is that? Or if you ever, the way I would describe it is, you ever watched Shark Tank, right? You ever watch Shark Tank and someone comes on and they're like, oh, Sharks, you got to invest in this company. And you'll be sitting there and you'll be like, okay, why do I need to invest in the company? And they'll be like, well, because this industry has like $1 trillion. And if we get 0.1% of that, then we'll be a multi-billion-dollar company. And they'll be like, well, okay, how are you going to get that 0.1%? And they're kind of like, oh, that changes things a little bit. So there were two stocks this week that went down, and they went down for different reasons. And I believe that would give us a chance to be able to show you how this would work. So this week, Target and Cracker Barrel both saw their prices go down, and then we'll break down the reasons why they went down. And we're going to start making the difference between investing versus speculating, investing versus gambling. And so I'm going to share my screen with you. All right, so let us go ahead and get started with Target. So Target would be one of those when you're sitting there and you're thinking, okay, how do I know if it went down for the right reason? And the 3-question filter that I'm going to give you today to make it very nice and simple is, has the story changed? That's question number 1. Did the company's fundamentals shift? That's what we're talking about. Did the story change? Is the reason that I thought this was a great investment, is that still true today? Have the fundamentals changed? And if the fundamentals, right, like the foundation, if you think of it like when you see those HGTV shows or talk about houses, where the real estate agent will sometimes say, this is cosmetic. The structure, the bones of the house is totally fine. This is cosmetic. We can slap some new paint on, but it's in the right neighborhood. The house is sound and solid. It's a good yard, yada, yada, yada. There's just the need to put in some new carpet and do some paint. Is it fundamental, as in there's literally a risk that this house is going to fall down? Or is it cosmetic, right? Is it just noise that people are just mad in the moment because everybody's mad about something? Number two is the leadership adapting. The world is always changing, but is the leadership weathering that storm well? So, do I trust the leadership team? Normally, when you're deciding if a stock makes sense to invest in, you're going to start with the last 5 years of like profits, right? Which is margin. Normally, when you actually look it up, you look at the revenue, you look at the industry as a whole, and you also look at leadership. Are these people in the industry? Do they still own a portion of the company? Right, things like that. You were like, how sound is that? And then number three is, does it still fit into your plan? There are times that everything is still okay. It's just they don't fit within my particular plan anymore. They are too risky for my plan, or the time that I believe it will take to recover is too far for my plan. And then we'll see if it still fits within your plan, because even if it recovers, it needs to be recovering in a timeline that works with your plan. So when you look at that, and we'll start with Target. Let's go through, and the reason I like this one is it goes through some of the things that happened over the last 11 years. So the data is always there. That's why I encourage people. That's why I want to show you. You generally just want to be able to start seeing kind of what's happening. What is the story of the company? And so you can see that the story was 2014, the current CEO that's stepping down started. And so you can see that the person came in, they weren't doing well. There was a massive data breach. I'm going to zoom in a little bit just so that it shows a little bit cleaner on the screen for you. So you can see that the data breach, they got the new CEO. And then the first thing that he did is said, hey, we're going to close all 133 stores that we were trying to start in Canada, which is crazy, right? Within a few years of opening. That is a huge expense. Not only have you hired people, you train people, you got all the construction and the capital expenditure, the allocation of resources, the planning. I mean, you can go on and on and on. If you watch sports, think of it like the first round draft pick and you picked a bust. It takes a while to recover from that, right? You can't just go around messing up the number one, number two, number three pick in a draft and then expect your team to be fine next year. No, like you've messed it up and it's going to take a while to recover. So that's what Target went through. You're like, okay, well, if the company was struggling and the new person's like, I think that this is part of the reason we're struggling, expanding too big, too fast. The way I would describe it is, historically, when you talk about the idea, so for example, the Roman Empire, they were expanding, they were growing. The thing about expanding too quickly is you have to cover and protect more areas. And it's like, I have one outpost here, and then that's the way in, that's the way out. That's easier than if I split my army up over 10 outposts. So he said, look, we're going to try to reinforce and get back to our roots and be like an American company. And we're going to see if we can not expand in other countries, but we're going to see if we can refocus. And so he takes that and he takes then $7 billion. Where does he invest it? It says in digital infrastructure. What does that let me know? Lets me know that he decided Amazon is eating their lunch. So he's like, Amazon's eating our lunch. Walmart's already made significant changes to do things online, and it's been working for them. Best Buy has changed things to do things online. Best Buy did the, if whatever price matching we'll do with Amazon, if you find it at that price, because people were going into Best Buy to hold the computer, to touch the buttons, and then they would go home and buy it on Amazon. So Best Buy said, well, if they're in our store, how about we just match Amazon's price, get the money, and be on our way? And that worked pretty well for them too. And so they said, we're going to remodel the stores, which is very common. The idea of remodeling is every generation is different. And if the new generation is going to buy my stuff, then I need to know what that generation wants. Sometimes you alienate your customer base. Sometimes you can bring them along for the ride. That's always a risky thing. And then they want to do new private label things, which just as it sounds, it's basically like either they create it or they would have like licensing and royalty agreements that would be set up. So boom. So they did all that, and you can see that was the right problem to solve. 2018, all of a sudden they're doing better online. Everything is growing and earnings soar. So we get CEO of the year, came in 5 years, turned Target around, great company. And during this time, I actually had some Target stocks. I think it was maybe like 155 at that time. When I had it, it's like 97 now, and I'll show that to you. And I had sold them well after that because you can see that things started changing. Well, all right. So you can see that that was working for us. Wait a minute, where did I go? Lost my, oh, all right. And so CEO of the year, everything was going good. Then the pandemic still did well during the pandemic because they had online sales that was set up. Everything was going fine with that. And then they started having a little bit of trouble from 2022 on. So there's a couple of things. They started getting into a little bit of the culture wars. So you can see that there was a pride backlash, they had a pride month, and then there was a lot of conservatives that were boycotting Target. They then said, all right, well, we'll stop doing that. And they didn't really suffer. So that actually had been maybe a sign that they thought that they were going to do that as the thing, like whoever screams the loudest squeaky wheel gets the grease or oil or whatever. They were like, all right, well, that worked then, so we're okay. The issue that they ran into, and you've seen it, so like Walmart rolled back its DEI, Costco said, no, we're not rolling back our DEI, and then Target said, we are rolling back our DEI. The problem with Target is Target actually had went like all in. Like, I mean, they had, even I remember buying very unique Black business items that I just would never have been able to find for like my daughters, with like books and music and like all sorts of cool stuff. And they had got rid of all of that. And so as a result, now Target basically was like, I think if we do this, our conservative half will come back. And then I think we can maintain our base, right? We talked about that. It's like, can I maintain a base while growing my group? And they ended up losing both. So the conservative half did not come back. And then they ended up losing basically everyone that liked their DEI, the multicultural aspect of things. So Target has been having sales that have gone down significantly every single month this year. Ultimately, the CEO is like, look, I'm out of ideas, right? So the CEO steps down. That ultimately is, let's go back to the three things that I said we would think about. Right, number one, has the story changed? Yes, the story has changed. How has the story changed? Well, Target has alienated two different groups on two different sides, and they were unable to get either of them to come back. Is leadership adapting? No, leadership is clearly not adapting. That's why he ended up stepping down. Does it fit into your plan? And again, I would say no, because this is not a short-term issue. Right? Remember when we started, the idea was, well, if things go down, doesn't that mean it's on sale? Well, it only is on sale if it's still a valuable property. And that's what we call a value trap versus like a value opportunity. A value trap is, oh, look, the price going down. I'm sure it will go back up eventually. No, everything's value doesn't go up. But even if it did, how long would you have to wait for that to work for your retirement? And that's why you would probably say no. And so you can see that Target for the year to date, you can see that its stocks have gone down about 30% from year to date. So we can see it was at like 137 at the year, beginning of the year, and it's at 97 now, 30% down. If you did from year to year, you can see it was up to 160 and is now down to 97. If you did the last 5 years, you can see that it was at peaking during the pandemic and all that stuff when we were talking about all the great decisions and all the wins that they had. It was peaking at 261 and now it's down to 97. We can see that Target is not able to figure out what they're doing. And then they ended up picking someone internally, I think the COO, as the new CEO. So that is also, generally speaking, concerning. The last thing that you would do, and then I'll tell you the Cracker Barrel story, is normally if you want to get in the weeds where you just see some of the numbers, I do like macro trends. So the reason I like macro trends is it's free, right? So if you go to macrotrends.net, it's absolutely free. And then all you have to do is go to stock research, because you're gonna just choose one company. So you'll click on stock research. Okay, for some reason it is going really slow, isn't it? I feel like it goes a little bit slower when I stream. That's what I feel like. All right. And then you'll type in the company and you'll look at Target. So you can see things like the revenue, 109, and then went 107, then went to 106. So we can see that that's decreasing. It's decreased by 0.5% by 1%. You can then look at the gross profits. It's just seeing the trend. We're not really worried too much, but we can see that our profits have declined by 3%. We can see that our gross profits have declined by 4.5%. Both are concerning as well. And then you could really look at any of these, and then you would just get the idea. But I think you get the idea of the trend. that things are decreasing, that it's going the wrong direction, that they're not having enough revenue, not having enough margin to be able to make the changes that they would need. And that is going to be a problem. So you can see that from multiple aspects, from the story to the actual financials, it's not looking good for Target. So if you ask me, Dre, would now be a good time to buy Target? It's on sale. I would say no, it's not on sale, or maybe it's a going out of business sale. Obviously, I don't think Target's going out of business, but the sale isn't the type that you would say right now, I feel comfortable. Does it mean that the new CEO won't be able to make the adjustments and it comes back? Of course not. They might. But what it does mean is we're not in the business of gambling. When we see the new CEO's vision, we will judge that vision, and then we can decide whether or not it makes sense to buy Target. But for anyone to go buy Target now, assuming that it will recover without knowing what the plan is, that's not investing, right? Investing, we have to have the information to then make the decision that makes the most sense for us. All right, so then the second one is going to be Cracker Barrel. So that one I actually believe I saw today. So Cracker Barrel stocks went down mainly because of their new logo. So let me show you the new logo if you haven't seen it yet. So you can see that there's the man in the barrel, and they got rid of the man in the barrel, and it looks like they're trying to make the logo the barrel, and then they kept everything else kind of the same. Okay. People are like, hey, this is culture, this is changing, whatever it is, the culture warriors are very upset. Stock goes down. The question is the same. Is my change going to bring in new people without removing too many of the people that are already here, right? Like, because the idea is to grow your company. Cracker Barrel has been seeing declines in sales for a little bit. So the concern is less to do with the changing of the company's branding. I think they spent like $700 million of trying to rebrand it. It said everything from trying to get rid of a lot of the trinkets and extra things, like they're trying to kind of declutter their stores and they're remodeling them, and they're trying to make these overall changes because the new generation isn't going as much. And I think and they're trying to figure out, well, we have to find some way if we want to continue existing to attract these new people, right? That's the idea. And so they're trying to figure out how to do that. Right now, people are like, oh, I don't like this. This is a bad thing. If it is or it isn't, I don't know. We don't know yet. But what we do know, and then we can still look up that information, what we do know is, let's look at the stock. Okay, so with Cracker Barrel, you can see that. So we normally look at like year to date. You can see year to date Cracker Barrel is up 30%, right? So year to date is doing well. We can see the decline. We can see that's what happened. And people are like, I'm mad at this. Okay, sure, right? But we see the decline. It's definitely gone down. But before that, it had been growing and it had been doing pretty well. You can see that, oh, that's actually the 1 year. So the year to date, it's basically even. So the growth that it had, it lost that today. So it's basically been even. And then over its lifetime, it's as you can see, right, it's up 4,500%, which is kind of nice. So right, if you have bought it for $1.31 back in '86, or even in the early 2000s, if you bought it for $35 and then it's currently at 54, right, you would have almost 100% return on that. So you'd be feeling pretty good. Well, actually, it's more than 100. You'd be feeling pretty good about that return. That's what we're saying. You can see that during COVID, when it shut down, it decreased a lot. That would be one of those situations where you're like, I don't know if that should be something that we are like, well, it'll never come back, right? Because obviously COVID closed retail. So COVID closed restaurants and retail. Why wouldn't they come back? It's like the cruise lines when they went on sale during COVID. That's one of those things where you would say, well, that has little to do with the company itself. That is a pandemic. If we're going through something like that, I think it is on sale because nothing has changed as far as our three questions. Because remember, our three questions are, has the story changed? Is leadership adapting? And does it fit into our plan? Most of the time, we know that the COVID was not going to be something that would be a 5, 10, 15-year thing. It was something that we knew would be a finite amount of time. We weren't 100% sure if it was 1 year or 2 years, but we knew it was a finite amount of time, right? That's kind of the idea there. So we can see when you're talking about Cracker Barrel, we can ultimately see that this is one of those things that if I did do the research, if I did feel comfortable about the company, the idea of them changing their logo and it going down like 12%, that is not something that I would believe is actually it's losing its value. That's just people reacting and speculating and freaking out. Right. KFC, if you remember, I don't know if you live in a place that has it. I'm in Florida, so I have seen it where the guy, the colonel used to be right there. His head was on it, and it was Kentucky Fried Chicken. And then they rebranded it to KFC and they removed his head. Right? Like that's kind of what you want to do if you're trying to brand outside of your area, you're trying to grow your reach. That's kind of something that you do. You simplify it a little bit. That's just generally what I see. That's what it looks like for me in my perspective. And so that wouldn't be anything that I would be too concerned about. I do think when you look at the changes in it, it ultimately depends on watching the current group and then watching the future group, right? I read about this stuff all the time, so I don't expect you to be bored by it. But there's everything from tuna, talk about Gen Z don't like tuna, so the tuna companies are trying to figure out what to do, to the numbers of people having children. Like everything is economics in some way, shape, or form, and you got to figure out how you fit in. But if you're out there and you're trying to make the decisions, what's best for you and your company, those are the type of things that I would look at. Not as much as what someone told me or what someone's recommending, but we actually look at the numbers. We read about it. It doesn't take too long. Hopefully you're able to see that. And then if we do feel good about that company, like we're sharks in Shark Tank, if we feel good about that company, then we'll buy more of it because it is on sale. If what we read about it is that company is actually making awful decisions, i.e. the CEO stepping down and they're doing all this other stuff, that's normally a sign that we need to leave that, whether it's based on the retirement or the leadership adapt. And you can see why those two questions become so important. As always, I'm thankful for our time together. Hope you have a great rest of your evening. I'm Dre Griggs, founder of Ascending Wisdom, certified financial planner. Until next time, stay safe and enjoy life.